Yes, it is possible to get interest rates in the fours right now, and there are a few ways to do it, but there are some catches and some drawbacks. Find out more right now. Let's do it. Hey, if this is your first time to this channel and you want to know everything there is to know about living in Atlanta, Georgia and the surrounding areas, as well as great real estate tips like today's discussion on getting lower interest rates, then subscribe below, tap that notification bell so you're the first to know about the current market here in Atlanta. My name is Jonathan, and my team and I are getting calls, texts, and emails from people just like you looking to make their move here to Atlanta, and we love it. So whether you're making the move right now, a month from now, or a year from now, feel free to give us a call, shoot us a text, send us an email. Our contact information is below in the description, and we'd be happy to help you make that smooth move here to Atlanta. One of the biggest impacts right now on you potentially purchasing a home is interest rates. You got so used to seeing rates in the 3s and the 4s, and some of you out there even in the 2s, that seeing rates right now at 6.5% and higher is shocking. And if you're looking to purchase a home right now, you might not be able to do that because home values have skyrocketed as well. But there may be a way to get you back to a rate that's in the 4s. Let me start with this. Not everyone will qualify for what I'm about to say. Credit scores will be involved, possible concessions from sellers, and for some of you, it will be only a short-term fix. Let's start with a scenario I like best, and that's buying new construction and using the builder's preferred lender. Before inflation numbers went crazy last year, builders were building like crazy and everything was getting snatched up. Well, when the rates started jumping up, some builders weren't selling as fast as they were building, and some builders now have a surplus of spec homes. For those not familiar with spec homes, these are homes that are already built or are being built, and the builder has picked out all the details for the home. So the buyer that's coming in really doesn't have any choices when it comes to paint, flooring type, and the like. You just come in and purchase the home they've built. With that said, some builders now have these homes sitting longer than they would like, and when that happens, builders start giving buyers incentives to purchase these homes. A vast majority of builders don't want to lower the list price of homes to get them sold, so what they do is start offering incentives like paying buyers' closing costs, adding free upgrades, and the like. The most attractive incentive I've seen right now is around the builders using their preferred lenders and offering lower interest rates. Here's an example I found from an offer from Chafin Communities and their preferred lender, Silverton Mortgage. For qualified buyers on specific homes and specific communities, they are giving a 30-year fixed rate of 4.25% and a 4.288 APR. For those not familiar, the fixed rate is the interest rate on your monthly mortgage payment, but the APR is a broader look at the money that you're borrowing with factoring in all the costs associated with getting the loan, including lender's fees and the likes. That all to say, you should really pay attention to APR as it gives you a broader look at the loan that you're being offered. For this particular deal, the APR looks pretty good. One warning I want to put out there to you is I saw a deal from a different builder that was sending out emails stating that they were getting 4.85% interest rate, but the APR was 6.125%. In this other deal, this wasn't as good of a scenario because they were giving you a lot of upfront cost to lower that interest rate that the lender was offering. That leads us to my first warning. If you see a deal with low interest rates, make sure you look at the APR to make sure it's low as well. Next warning to give is there's an asterisk next to the deal that I'm talking about and a lot of fine print that you need to make sure you read. It states when the contract has to be written by and when homes have to close by in order to qualify for this deal. In this case, the builder and the lender are saying you have to close on the home by March 17th of 2023. That's a pretty short time frame from now. Can the house you get under contract close by that time? What happens if there are delays and you can't close in the time frame that's in the contract? Will the lender still honor this deal? These are very important questions that you need to make sure you ask a lender. Also, it talks about credit score, the type of loan, sales price, and more. Find out all the details before signing a contract on new construction if they're offering this lower interest rate. The other issue with this specific offer is it only applies to certain homes and communities. You will need to check to see which homes and communities it applies to before you get too excited. Sometimes these deals are on homes that have been sitting on lots that maybe back off to a huge drop on the back or sit next to a retention pond. Or maybe the floor plan isn't as attractive. Overall lesson here is make sure you read the fine print and understand your overall cost that you'll actually be incurring when getting a loan. The good news is this may actually be a sweet deal for a few of you out there, so it may be worth looking into. A second way to get rates in the 4s is to do a 2-1 buy down. This is not as attractive, but can still be good for certain buyers out there. The 2-1 buy down is where the interest rate for the first year of the loan and the second year of the loan is paid up front, so it enables you to get 2% off the interest for the first year of your loan and 1% off the interest for the second year of your loan. However, in year 3, the rate of the loan comes back to whatever the rate you were given when you got the loan to begin with. So let's say that the rate's 6.25%. Well, in year 1, in this scenario, your rate would be 4.25%, and in year 2, it would go to 5.25%. But in year 3, your rate jumps back up to 6.25%. This type of loan may be ideal for you if you're thinking that your income is going to increase over the next few years, and the larger monthly payment that will come in a year or two from now isn't as big of a deal. The other thing to know about this is that the seller of the home can actually help you buy down the rate. You can ask the seller to pay seller-paid closing costs and get enough closing costs to cover the buy down. Now, there are certain rules in place for certain types of loans that only allow the buyer to pay a certain percentage of the closing costs. You will want to talk with your lender about this scenario and make sure you know what applies to you. Another way that the 2-1 buy down makes sense is if you think you're going to refinance in a year or two for a lower rate. If that is the case, then you may not ever get to that year 3 where the loan payment goes up to that 6.25% rate because you refi and get a better rate. In this scenario, though, you're anticipating lower rates coming in the future. The risk is the possibility that maybe rates won't go down in the next few years. Atlanta is such a great place to live, and there are so many great suburbs to call home. Whether you're making that move right now, a month from now, or a year from now, or you just want to talk about interest rates, then please give us a call, shoot us a text, send us an email. Be happy to help you make that smooth transition here to Atlanta, Georgia. Until then, I hope to see you around town. Thanks, and I'll see you next time.